moment, our markets are absolutely quiet. Not too much is happening. But there are so many stocks which are hitting fresh 52-week highs. So I think we should, continue to look at those. So if you look at it today, there's Sun Pharma, there's Bajaj Auto, there's Trent, there's Interglobe Aviation. So despite the market being very quiet, there's no dearth of stocks hitting fresh 52-week highs. Cipla, Shriram Finance, Torrent Pharma. In fact, a lot of pharmaceutical stocks are hitting fresh highs right now. Manish Jain from Centrum joins us now to discuss the market fundamentals, his top sectoral picks. Manish, the sector that I wanted to start with is the auto space, because one of the stocks, Bajaj Auto, has hit a fresh record high today. And the management in their conversation with us yesterday was telling us how they plan to go big into the electric vehicle or clean energy vehicle space, right? Their market share also has been gaining quite a bit. I mean, they used to be at about 5% market share a year ago, now sitting at almost 18% market share in this space. But my question to you is, this EV theme, is it something that you would continue to bet on?
Yes and no both. But I think given the way the markets are shaping up now, there are enough and more avenues to play the EV themes. If you look at the markets today, a number of companies, especially in the renewable space, for example, the EV batteries or maybe the solar module makers, the panel makers, are all going to be, they're all sitting on the sidelines looking to hit the IPO space in the next 1 year or so. I would much rather wait out and play them for the EV and the renewable story rather than look to play through the auto route. Because the fact of the matter is, even in a best case scenario 5 years out, EV is still going to be a very small and a negligible portion of the entire auto basket in India, unless and until we really see some path-breaking, investment which is going to happen as far as the infrastructure is concerned, especially the highway charging infrastructure is concerned. I'm not going to be very, very overtly optimistic on the EV story. It's good to play it for the sentiment of it, but I'd much rather play it more through a pure play model rather than look at it from an auto space perspective.
So Ola Electric is a pure play model. Is that a stock that you would consider? You spoke about some others, right? Like solar modules, batteries, etc. But what about Ola Electric?
So if the shoe fits, why not? I mean, the fact of the matter is...
But does the shoe fit?
See, the point is there are a number of ideas that we are evaluating in this space. A number of companies that are already listed, a number of companies that are in the pre-IPO stages, and we are evaluating them all very closely. The fact of the matter is that Indian markets in the last 5 years have changed very dramatically, right? The whole composition of any portfolio that you look at it, whether it's defense, whether it's renewable, whether it's all these new age technology companies, some of these tech-based food delivery platforms, for example, the way people used to perceive them 5 years back versus the way they are perceived today, there's a very dramatic shift in that. So yes, why not?
What's the overall view on the markets, Manish? I recall our last conversation where you were cautious. In no uncertain words, I think you were anticipating a bit of a pullback, and you were in your fund, accumulating some cash to deploy at lower levels. Well, we've had time correction, but we haven't had a pullback.
There was that one day when the market corrected 3%. I think that day we deployed about 4-5% of the funds that day. And now today, beginning of last month, we were at around 7% cash position. Today, we are sitting at around less than 2% cash position. And my view on the market is very, very simple, which is that going into the next 6 to 7 months, the market is not going to see any major correction from here onwards, but it's not going to see a very massive, exciting sort of a rally either. I think we are looking at close to 26,000 levels for the markets, which is roughly out another 3 to 5% sort of a rally from here onwards. But it's going to be intermittent corrections, and every time the market sees a marginal pullback, I would be deploying the money, because from a 2-3 year perspective, the story is still very, very interesting. India can still be a 15% compounding sort of a market from equities perspective.
Okay, India can be a 15% compounding market, got that. Today is a day when a lot of pharmaceutical stocks are hitting fresh highs, right? Whether it's Cipla, Torrent Pharma, Sun Pharma, even some of these broader market pharmaceutical names like a Piramal Health, etc. But your thoughts on this entire space? If someone has missed out on the rally, is there more to go?
Yeah, I mean, we've missed out on it. We don't have a massive position in pharma in our fund, and that is kind of a shame. But pharma is a sector that is coming out of a very long lull, almost like a 7-year kind of a lull. And it's now starting to come on its own. And a number of concerns that people had, whether it's the pricing or the ANDAs or, the US regulations, all of that, I think they are now starting to go away. And I do think that it's going to be a slightly longish sort of a run, especially given the pullback that we've seen in the banks this year, and especially the kind of rally that we are witnessing to see some of these alternate sectors which have not participated yet so far. For example, IT, for example, FMCG. I think Pharma again fits the bill perfectly. So yes, Pharma does have a little more room to go as far as the rally is concerned.
Okay. You said you've deployed cash, right? As the month has progressed from 7% cash holding, you're down to 2%. Where all have you invested?
So we've picked up a number of sectors. There are a few sectors where we've kind of incrementally further booked profits. For example, some of these retail names, we've had like a 20 bagger over there over the course of last 4 or 5 years. So we've kind of booked a little bit of a profit over there. Real estate is something that we had a massively overweight position on. So we've kind of booked a little bit of profit over there. But otherwise, what we have done is we've picked up ideas. We've picked up ideas in the affordable housing space. We've kind of picked up ideas in the NBFC space. Hospitals is again another area where we've kind of deployed a little bit of a money. And it's been our debut month as far as metals and short cycles are concerned. So we've kind of picked up one idea over there as well.
Okay, so you're saying real estate, you booked a bit of profits there. So are you planning to churn out completely in real estate? Because there were some reports indicating that now there's a bit of saturation, a bit of a slowdown as far as, property registrations are concerned, especially in some of the top metro cities like Mumbai. How do you read into that, and what does this mean for some of the listed players?
So the fact of the matter is, the reason why we look to book profit in real estate is because we have done fantastically well, right? I mean, this is a position that we had built up about 18, 19 months back. And 3 ideas that we picked up, 2 out of them have been multi-baggers for us, about 3 to 4x returns. So it was very prudent on our part then to kind of get out of those names. But I do think that real estate as a sector still has a little bit more time to go. We are still in the mid-cycle. We are still not at the peak of the cycle. The fact of the matter is urban consumption has seen affluence, discretionary consumption has seen affluence. A large part of the real estate cycle that you've seen in the last 18 odd months has not been from an investment perspective, but it has been more from a consumption perspective. Inventories are still at about 12 to 14 months. The number of new launches that the builders are doing are kind of, they are very, very, very conscious in that space. So I think overall, and the rate cut, right? I mean, the cycle of the rate cut is still due on our head. So I think there's still some leeway to go. So we are not going to be churning out of it completely. It's more of a profit booking than anything else.
Manish, thank you very much for joining in today on Trading Hour. Look forward to our next conversation. Get into a short break on that note. We'll come back and discuss commodities with Manisha Gupta. Stay tuned.